As the financial landscape evolves, so do the tactics employed by scammers to exploit investors. In 2025, new technologies, innovative investment opportunities, and global market dynamics will continue to provide fertile ground for fraudulent schemes. These scams often target unsuspecting investors looking for quick gains, preying on their lack of knowledge, or even their emotions during volatile market conditions. Protecting yourself from these scams requires awareness, vigilance, and understanding of the latest fraud tactics. This video explores the top 10 financial scams targeting investors in 2025, so you can better safeguard your hard-earned money. 1. Cryptocurrency pump and dump schemes. Cryptocurrency remains a hotbed for scams, with fraudsters often using pump and dump tactics. These scams involve artificially inflating the price of a lesser-known cryptocurrency through misleading claims and social media hype. Once the price has been inflated, scammers sell off their holdings at the peak, leaving unsuspecting investors with worthless coins. In 2025, with the proliferation of new digital currencies, pump and dump schemes are likely to remain a prevalent threat. Investors should exercise caution and thoroughly research any cryptocurrency before purchasing. 2. Ponzi schemes with high-yield investment claims. Ponzi schemes have been around for years, but their deceptive allure continues to attract new victims. These schemes promise high returns with little risk, often through investments in obscure assets or in regulated funds. As the financial markets evolve, scammers will use more sophisticated methods to convince investors that they can earn sky-high returns. The scam works by paying returns to earlier investors with the capital of new investors, eventually collapsing when there are not enough new investors to cover the promised payouts. Avoid any investment that promises unrealistic returns without clear, verifiable details. 3. AI-powered, too good to be true investment platforms. In 2025, as artificial intelligence becomes more integrated into the financial industry, scammers are likely to use AI-powered investment platforms as a front for fraud. These platforms may offer promises of algorithm-driven, high-return strategies that sound too good to be true. Often, these platforms are nothing more than a facade for stealing funds. To avoid falling victim, investors should look for signs of legitimacy, such as clear company information, regulatory oversight, and independent reviews. Always be skeptical of AI-based platforms that offer no transparency or do not allow users to withdraw funds easily. 4. Social media and influencer investment scams. With the rise of social media influencers and financial gurus, many scams now leverage social platforms like Instagram, Twitter, and YouTube to target potential investors. Scammers often use influencer endorsements or fake success stories to promote investment opportunities that turn out to be fraudulent. These scams can range from fake crowdfunding projects to fraudulent investment courses. To protect yourself, avoid following investment advice from unverified sources and remember that true professionals rarely offer unsolicited advice on social media platforms. 5. Fake initial coin offerings, ICOs, and security token offerings, STOs. Initial coin offerings, ICOs, and security token offerings, STOs, have become a common way for blockchain startups to raise funds. However, these fundraising methods are also ripe for scams. Fraudsters may launch fake ICOs or STOs, often creating attractive websites and white papers to convince investors to send money to a non-existent project. In 2025, with blockchain technology becoming more mainstream, investors should ensure that any ICO or STO is backed by a legitimate business, thoroughly vet the team behind it, and avoid offers that sound too good to be true. 6. Fake robo-advisors and automated trading systems. Robo-advisors are gaining popularity as a low-cost, automated solution for investors. However, scammers are now capitalizing on this trend by offering fake robo-advisor services. These fraudulent platforms promise high returns through sophisticated automated trading strategies, often using complex jargon to mask their true intentions. They might lure investors with flashy websites, testimonials, and promises of easy gains, only to steal their funds. To avoid falling for such scams, investors should ensure that any robo-advisor they use is regulated, transparent about fees, and provides real-time access to their portfolios. 7. Real estate investment scams. As real estate continues to attract investors, it's also a common target for scams. Fraudulent schemes can include fake real estate investment platforms that offer lucrative returns from property development or rental income. These platforms often entice investors with promises of high returns and minimal risk. In 2025, scams might also involve tokenized real estate assets, where fraudsters sell shares in properties they do not own or control. Always verify the legitimacy of any real estate investment platform, and ensure it is properly licensed and regulated before committing funds. 8. Phantom stocks and fake IPOs. Phantom stocks and fake initial public offerings, IPOs, can easily deceive investors who are looking to get in on the ground floor of a promising company. These scams typically involve fraudsters impersonating a reputable company or promising exclusive stock offerings in an IPO that does not exist. In 2025, with increasing interest in tech startups and new IPOs, investors must be cautious of unsolicited offers or those that lack transparency and verification. Always check that the IPO is legitimate by referring to official filings with the U.S. Securities and Exchange Commission, SEC, or other regulatory bodies. 9. Forex and commodity trading scams. Foreign exchange, forex, and commodity trading scams have become a persistent problem, particularly for inexperienced investors. These scams often promise high returns in forex or commodity markets, and they usually take the form of fake brokers or platforms. Fraudsters may offer attractive bonus incentives, guaranteed profits, or free training in exchange for deposits into their platforms. Once the investor has deposited funds, the scammer may disappear with the money, or the trading platform might manipulate results to induce further investments. Be wary of unregulated forex and commodity platforms, and always research the broker's reputation and licensing before making any trades. 10. Ponzi schemes in green and ESG investments. With increasing interest in sustainable investing, scammers are also jumping on the green bandwagon. These fraudulent schemes promise investors high returns from renewable energy, sustainable farming, or other environmentally friendly initiatives. However, these investments often turn out to be Ponzi schemes, where returns are paid out using funds from new investors rather than legitimate profits. In 2025, as ESG, environmental, social, and governance, investments grow in popularity, it's crucial to conduct thorough research into the companies or funds you are considering. Be cautious of investment opportunities that do not have clear, verifiable track records or regulatory oversight. In 2025, financial scams will continue to evolve, targeting investors with more sophisticated tactics and leveraging new technologies. By staying informed about the latest scams and practicing caution, you can protect yourself from falling victim to fraudulent schemes. Always perform due diligence before making investment decisions, work with trusted financial advisors, and be skeptical of offers that sound too good to be true. Remember that if something promises high returns with little risk, it's likely a scam. Awareness, vigilance, and a healthy dose of skepticism are your best defenses against financial fraud.